All right, everybody. Good night. How are we doing out there? How's everybody's evening been so far? Could be in the morning where some people are. Again, I'm Doc Severson here with session number 4 of the Fractal Energy Coaching. Okay, looks like we got a couple of people on. Tonight, actually, a public service announcement here is that we have SpaceX is actually launching. And that is going to happen about 45 minutes from now. So we should be just about wrapping up around that time with tonight's session, depending on your questions. So think about any questions that you have for tonight. Little Doc down in the lower right-hand corner. How we doing out there? Hey, guys. I think I may have to disappear during a few slides because I'm going to be blocking stuff. So I will come back later. So, all right. We are not going to be talking about any specific trades tonight, so we don't have to worry about the SEC showing up at my door. Tonight, what we're going to be doing is putting everything together with fractal energy trading. So the first session that we talked about, which was last week, was single time frame price action. The next section was dual or multiple time frame price action. The session that we just did a couple of days ago was on market energy, and now we're going to put everything together with multiple time frames and looking at energy on multiple time frames. So this is where we put everything together, kind of smash it together, and ultimately try not to confuse ourselves, right? This is what fractal energy trading is. So the most common obstacle from somebody just learning this is complexity. You've got multiple things going on, and you're looking at things in many different dimensions. And quite honestly, it took me several years to put this all together in a way that made it simple so that not only I could follow it, but also I could explain it to other people. All right, looks like we are doing okay out there. So it can be easy to get lost with multiple time frames. You end up with this sort of Gordian knot, and you're not sure who's in charge. So what I want to do is to kind of simplify that tonight and give you some rules in which you can create some structure, okay? A little bit of structure. So this is why you have to use a methodical progression when using fractals so that you're not all tied in a knot here. Number 1, focus on determining the trends in price from the top down. So what we talked about the other day when we talked about energy was that price is king. Price is king, right? So we made that abundantly clear that price is king. It will override everything else out there. It's the only actual measurement that we look at when we look at markets that is not delayed and overrules everything else. It is the base root issue that we're looking at is price. So in this case, if we're looking at Bitcoin in what was formerly an uptrend, the first thing we want to do is we want to look at the trend on every time frame. In this case, monthly uptrend, and this overrides just about everything else, right? So rule number 1 of price action is that larger time frames dominate the trend. So we're going to see this parent time frame kind of ride herd over everything else. What do we have on the weekly chart? We have an uptrend moving into consolidation. Uptrend moving into consolidation. And then what do we have at the daily chart over here is a former uptrend working into the potential for a downtrend, but it actually pops into a higher low and then a higher low, higher high. So this is exactly when we start to see this transition back into an uptrend again, and that's all within the context of this weekly flag pattern. So notice that we're looking at things, and I will do this when I do the newsletter. I'll walk through things when it's the rare time when I'm using more than one time frame. What you'll typically see me do is say, okay, what's going on here at the anchor charts? And that could be the weekly chart over here. This could be, here's the daily, here's the 240 minute, right? So weekly, daily, and then sometimes I'll go down to the intraday chart. And actually, as we get into the futures course, which is going to start next week, and oh, by the way, I hope you guys were able to catch our little announcement that we made this afternoon for you guys. Hope that made sense. That may affect some people that are on the call and maybe not everybody. I don't know. Okay, so weekly, daily, and then intraday. So we go down through this progression from one down to another. Each one carries less weight as we move over to the right. Hey, Tig, how you doing? Okay, so that is, keep that progression. It's almost like the same thing, like a pilot goes through a checklist before they take off, or they're in the air, or Lord forbid, there's something that goes wrong. There is a certain progression that you have to go through for everything. Yeah, it was truly amazing. I went through a lot of pilot training and everything was down to here. And everything is mnemonic too, like GUMPs, like gas, undercarriage, mixture, right? Everything like that. So everything had a mnemonic to it that you could remember, which is part of a checklist. Number two, what are the energies at each time frame? Will one time frame limit or affect the others? And the answer is always yes. Okay, so if we look at this same thing here, we're going to see the monthly chart, again, an uptrend here, but notice the energies down here. What does this mean? This means that the probabilities exist for this chart to perhaps stall or slow down, or maybe even retrace in the near future. Okay. Now we're seeing this, the opposite happen. We're seeing the monthly or the weekly chart. I'm sorry, this is the daily chart. This is the weekly. Keep thinking this is the monthly over here. This is the daily, and the daily is in a bull flag scenario. And then we've got the, I think I may have mentioned that this, or referred to this as the daily over here on the right. It's a 240 minute. And so we've got a ton of energy here, and an increasing amount of energy setting up on the daily chart. So how does that compare versus the weekly chart? Well, the weekly chart will at sometimes when you get a trend that's this strong, you can get a weekly chart that will coast for quite some time. So the larger the time frame that you have, the less sensitive the energy values are. You can get these things to go on and on and on and on forever. This is why something like as much as the monthly chart, I rarely take signals off of the monthly chart unless it's in super, super exhaustion. And then maybe at that point, I will look for some type of reversal or movement into consolidation. But rarely do the monthly chart signals, are they timely enough to be able to be acted upon? Oh, I'm in the way now. I'm in the way. It's time for Little Doc to get out of the way. So I'm going to go over here and choose a different view. So I am definitely in the way of the 240 minute chart. Sorry about that. Didn't realize that. Okay, so same kind of thing is that the larger time frames, the energy value on the larger time frames has more of a lasting effect as to whether they're fully charged. You can see how in this one, in the weekly chart, when it's fully charged over here, notice how, you know, when you're in this consolidation, notice how it built up a very powerful move that broke off of there. All right, let's see what else we have here. Number 3, what is your long-term trend forecast? Well, if I were to go back to this one, I would say the long-term trend, the trend right now is still to the upside. There's nothing that's on this chart that shows me anything different than an uptrend showing up. However, the near term would say, okay, I'm forecasting an uptrend. There's no reason for me to think that this trend is going to reverse. I'm not seeing any reversals from the inside out, which is rule number 2 of price action. But I would say it needs a rest here. And this, you'll see me go over this every night in the newsletter, as I'll say, okay, let's look at the signal chart. Signal chart looks great, but the anchor chart is an exhaustion, not a high probability trade to chase after this one. And that has actually helped us quite a bit lately in this sort of whack-a-mole market where we don't chase after the weekly exhaustion. The weekly exhaustion a lot of times turns into a much longer consolidation that would just be a waste of time and capital chasing after that. Number 4, what is your short-term reversal forecast? If we go back to this, our short-term reversal forecast, we don't see any reversal in play. If anything, I see a reversal back up to the upside on the 240-minute chart. So that's what I would see on this one. Otherwise, we don't see any potential for any kind of reversal to put a damper in the uptrend. I swear someday we'll see an uptrend like this again, and it will be glorious. Maybe you have to go to a different market to see one in the short term. So never forget that price is king, folks. Never forget that price is king. If there is ever a doubt about which you look at, so first of all, price rolls over energy when it comes to this. So again, you got a lot of things going on, especially if 3 time frames going on, which is why I say focus on 2 time frames to begin with. So whether or not that's a 1x, 25x, and usually that's more applicable if you're doing short-term intraday trading, or a 1x, 5x, which is like daily, weekly, which is very, very common for us to use with swing trading. But price will always be king in this scenario versus the energies. I mean, I can show you situations like, similarly, Binance Coin lately, it's just been ripping, and shows absolutely no reaction to an exhausted chart. Price is king. You're always going to find examples like that where you have a supply-demand imbalance and people cannot get enough of something, so they will chase it higher. The shorts are getting squeezed. You're getting a runaway market. You're getting people FOMO chasing after it. And you're not going to be able to measure that objectively you can't measure that sentiment change, that supply-demand imbalance in those scenarios with the chop index. The chop index will just go flooded. It'll show exhaustion and it'll continue going higher and you'll get frustrated. So don't forget, price is king in those scenarios. Some final tips. And so don't forget, if you have any questions you want to go over, this will be a good time to sort of write those down to yourself, because I don't have any examples tonight. We're not going to say, okay, here's example number 1, 2, 3, 4, 5. It's more up to you guys. If you want to see something or have me analyze something for you, or say, hey, how would you handle this scenario or this situation? Then I will be happy to take that example and dive into it. So some final tips here. Your ability to use the system will only be good as your acceptance to trade what you see and not what you think. I see this happen over and over again, regardless of market, regardless of time frame, regardless of anything else. This is human nature. We get something locked into our mind. And perhaps, we watched a really compelling video on YouTube about something from some other dude, or maybe even me, who knows? And maybe they were really emphatic about something like, wow, I have never seen a signal this powerful, and this is going to happen, and you can bank on it. It's hard not to fall into that. And all of a sudden, what happens is your reticular activating system says, I am going to find out everything I can from that. And it gets tunnel vision. And that's the only thing that it will pick up for you. It's almost like tuning your antenna to only that wavelength. It just picks up that information alone. And this is how you get confirmation bias. And this is where you trade what you think and not what you see. So obviously a big topic. Perhaps someday what I'll do is I'll put together a course or a class or something like that on actually the whole mental aspect of trading. It really is, I sort of refer to this as the 80 to 90% of trading success is down to your mindset. And it is absolutely true. But people like to, it's kind of strange because people like to talk about the nuts and bolts, and I was no different than that when I started. I just wanted to talk about the nuts and bolts, and I didn't want to deal with all that sort of touchy-feely stuff, right? And this is absolutely the most important thing. So I'll include myself in the lower right-hand corner now because I'm using hand signals here. So, but the trading what you see and not what you think is actually, it's easy to write that down. It's easy to say, well, that's the way I'm going to do it. It's a lot tougher to do sometimes. Confirmation bias can be very surreptitious, can sneak in there. So if you bring any bias into a system, it will render it useless. All of a sudden you'll look back and say, why did I do that? Well, it's because you had a bias. That's that human mind. Human mind's a very powerful thing, and it will also do things. The subconscious mind's a very, very powerful thing. It will cause you to do things you don't really understand. Can't really explain later on. So what you have to do is almost turn yourself into a decision tree. You have to turn yourself into almost a flow chart. Adopt an if, then else. Hey, if I see this happen, this is the way I'm going to handle it. Otherwise, else, I'm going to handle it this way. So you have to train your brain to that type of logic depending on what you're seeing and be able to define that logic. So there's 3 possible directions the price can take, up, down, or sideways. I mean, it really is that simple sometimes. It's like, as a chart is going to do something, it's can either go sideways, up, or down. And this is why I'm always boxing in the price into an area, because I know what the significant lows are. I know what the significant highs are. If it breaks above significant highs, then it's confirming an uptrend. Otherwise, it's reversing to a downtrend. The system will only show us the probability edge with the trend and the energy. It's not going to show us what's happening in the future. It's not going to show us. Now, quite honestly, there are many, many times where we get a really good read on something, and it almost seems like we really predicted that. And I don't like to feature that. I will say, hey, like we said X number of days ago or X number of weeks ago, I will say, hey, there's a very low probability. Like, for example, Bitcoin, when Bitcoin fell out of the second floor down to the first floor back in November, the weekly chart got exhausted very quickly. And so at the time I was saying, it's highly unlikely that this is just going to keep on ripping to the downside. It's more likely that it's going to consolidate here. That's exactly what happened. So that's no great analysis of mine. It's just the probabilities that occur when you work with the fractals. So probability edge of trend and energy. So this is very important. Again, it's not predicting the future, but it's what will you do if the price goes to any one of the 3 directions. So if I do something like this, if we see a trend going like something like this, okay, so we have a significant low defined and we have a significant high defined. And so we can kind of box in the price action here. We can box it in. And we now have kind of decision points. What will you do if the price goes to any of these 3 directions? So this is more of a case of, I know what I will do if the price prints a lower high and falls out the bottom of this. I also know what I will do if the price continues higher and confirms the recent high. So it may be a decision point. This may be a trade that you already have on, and you need to know how to handle that. It may also include itself with an energy read, or perhaps this is going to be a short entry into a new trade. Maybe this is a pullback entry into a new long trade that's going along with the trend. It's hammering off of a trend line. There's all kinds of reasons and confluence to stack into this. But if it prints a lower high and rolls over, maybe you don't want to hold on to that trade any longer. So learn to read price on one time frame. And I would go back to this again, because a lot of people, what they want to do is they want to rush through this like they're in a hurry, right? So it's like a race, right? I'm only going to be alive for another 40 years, right? So I got to learn this really quick. So learn to read price on one time frame first. It's a skill that will stick with you for the rest of your life. You'll be able to use it on any market, any time frame, anywhere. Think about that. Where else can you say something like that? That once you finally learn that skill of understanding how to read price, trends, and reversals, that you can apply it towards anything. It will never change. A price chart today is the same as a price chart was 50 years ago. They don't change. The character of the markets changes. The volatility changes. The realized volatility, the implied volatility of any options market, those will all change. But the price action does not change. It's the one thing. It's almost like learning accounting, right? It's almost like that one guaranteed skill that will always be there. Yeah, maybe some robot's going to be interpreting us for it, 30 years from now, maybe 20 years from now. But today, this is a skill that will never go away. Learn to incorporate fractals with 2 time frames to begin with. So start with 2 time frames. Don't go straight to 3 or 4, things like that. Don't overcomplicate things. Keep things as simple as possible and no more complicated than that. So I would suggest weekly and daily for most swings and position trades. And you can start with a 4 or 5 hour chart if you want to. And, you can add a 3rd time frame. A lot of times what I'm doing lately is I will use something like the 5 hour chart. I will use a 1 hour chart. And I will use a 12-minute chart. So things are pretty slow lately. So even a 12-minute chart is not that fast if you know how to read reversals and things like that. So this is a 25, 5, 1 scenario. So this is what I'm using intraday for most markets. And again, that works for me. The 3rd time frame, to me, this is the 3rd time frame. This is the one I use the least. So it's only just a filter. That's all I use it for, is just a filter. Like, is there enough gas in this tank for this to run? And it's really that simple. So short-term trades can use the daily or 4 or daily or 1 or the combination that I just brought up here. So keep working on it until you find your time frame, your trade, your setup. It could be the RSI Laguerre, it could be just the choppiness index. It doesn't have to be. It can just be price, actually. If you just put me on a desert island and said, you get no indicators, I'd say, well, give me just a couple of time frames of price and I can live with that. It's really all you need. Okay, I've got a question here from Tig. In a scenario where price is racing up higher, heading for a parabolic blow-off top, and the chop is in exhaustion, what do you do? Do you sell or look for some other indicator or candlesticks? So, Tig, help me understand, are you already in a position when this is happening? So if you're already in a position, so I've got 2 answers to this depending on whether you're in a position or sitting on the sidelines. If I'm sitting on the sidelines and I'm not in yet, and the fractal energy on, typically we're looking at the anchor time frame on something like that. If it's exhausted, I will not enter. I will not do anything. I will sit on my hands and I will say, there's always another one to come. So if I'm in cash, sitting on the sideline, watching something rip away like so, kind of like Binance coin right now would be a good example of that. Then I sit on my hands and I say, I will wait for this, because there's rarely a time when jumping on board something like this works. Now, I do have an exception to this, and that is the equities markets over the last, I'd say 5 to 6 years. The equities markets over the last 5 to 6 years have featured a lot of these parabolic runs that just go on forever. And again, I'm talking about the U.S. markets here. Those are the only ones that I'm really familiar with as far as equities. I'm not familiar with Australians or the CAC or the DAX or any of those other European markets. But this is all because of cheap and easy money. And who knows, we may get this involved in the crypto markets. I mean, certainly with the low level of capitalization that we have right now, they are a big target. If the yield starts to go out of the equity markets, money is never in short supply. It will find a new home, and it could be the crypto markets again. So we could get something like this. So I never, ever chase after something like this. However, what I've learned to do is a couple of things. First of all, buy at the highs. So if this is the anchor chart, and this is the signal chart, if I have something going into a parabolic mode, depending on the market, I will actually be okay with that as long as I can get a way onto it. I will absolutely wait until the daily chart shows consolidation and then a breakout from there. Okay, so already in a position. So that's the one side. That's you're sitting in cash and you're wondering whether to get on board that. In the crypto market right now, I do not chase after a parabolic anchor. So if I see an anchor in exhaustion, really there's very few coins that are, once they go into anchor exhaustion, there very few coins are actually going anywhere. Now, I know that's not your question, but at least I wanted to finish my thought there. So I don't chase after anything unless it's totally ready to go, fully ginned up, set to go. Okay, so your question is already in a position, you got something smoking away like that. What I do is I peel off position size. So I don't make it a binary call on something like that. I always peel off position size. So I do that typically intraday. I'm using futures or something like that. So I'll start off with, maybe a couple of contracts, and I'll go for what's called risk out, or a position at which I cannot lose money anymore. And then I'll leave a runner. And a lot of times I'll run this thing for as long as like an average swing size. Now you can play games with like trailing the stop behind it. It's really tough to do. The other thing that you can do is you can look for exhaustion on there, but then as soon as you do that, the other answer, the real answer to your question is you're never going to be happy after the fact. You're never going to be able to get the top tick. You'll never be, you'll always be unsatisfied with your ability to harvest profit off of a parabolic move. Because if you get shaken out, it'll continue going, and then you're going to feel like, oh damn, I could have yielded so much more out of that. So what do? You change things. And so the next time you get on board, you're like, I'm going to give the next one hell of a lot of room. And so what happens to the next one? The next one comes along and you set your stop way down here to give it a lot of room. And then what'll happen is it'll come all the way back down and you'll give up every little inch of that thing. So this is, I guess what I'm saying is it's really hard. And the best way that you can do this is to take profits with the meat of the move and then try to trail something up and just try to be okay with getting a chunk of this and never expect to get the very top on a parabolic. If you're lucky enough to get into a parabolic move, pat yourself on the back and get what you can from it, but don't expect much. Because you'll never get the top. You'll never get the bottom. You'll never get the bottom. Bottoms are an event. They're very difficult to get in, not only from just the emotional point of view, but also they're very spiky. But tops will drive you nuts because tops are a process. They will just knock you off Just when you think you got something going, they will knock you off and then they'll reverse. So bottoms are an event, tops are a process. Very, very difficult to get either the top or the bottom. And it's an urban myth that somebody can identify the top or the bottom. The best you're trying to do is to, you know, what I say to a lot of people is the bears are always too early. Bears love a parabolic market. They start shorting that thing. And then finally they get to the point where they're becoming part of their own problem because they have to get out, because all of a sudden they're getting a margin call and they have to buy back the position, which adds more, right? More demand to buying it. And so that's why tops can go on for quite some time before they finally collapse in a heap on the other side. Okay, anything else? Anybody else have any other questions about how to put this all together? Of course, I mean, this is not the last time. You guys can always reach out to me through email or hit me on the Discord page. You know where I live, right? So it's not hard to get a hold of me on this. So let me know if there's anything else or any other examples, but I will, you know, quite honestly, I'll be going over this stuff every day, and you'll see a good dose of this as well too with the futures class. The futures class is going to include a very condensed module. So we're going to collapse everything in the Fractal Energy Masterclass into one module. And there's going to be a fair amount of, if you don't understand this, please refer to the Fractal Energy Masterclass over there. But we're going to be using, you know, either 2 or 3 time frames in there. We're going to be using exactly the same concepts. The only thing that's going to be different is we may add that cute little RSI Laguerre study on there to give us a little bit of objectivity as far as, you know, hooks and signals and things like that. All right, guys. Anything else? Anything else that I can help with, or any other questions? Or I don't have any good jokes right now. I'm terrible at jokes. I'll hear a joke and 2 minutes later I can't repeat it. Okay, giving you guys a couple more seconds here. Tig, you're way late in the evening there. All right, I think we are dry. So don't forget, if you joined me late here, I want to go back to this slide here. And there's a launch going off. I don't know if it's still on time, but there's a launch going off in about next 10 minutes or so. SpaceX, so you can watch it online. So just go out to SpaceX.com and watch. And this is actually pretty cool. If you haven't seen one of these things before, they're amazing. Especially when the booster lands. That is the cool part. I don't know what it is about that, but you can't get enough of that. All right, folks. Thanks for showing up, and we will see you guys on the next session and the next trade school. You guys take care now. There goes a sight from my soul.